Hello guys. um, some of my subscribers asked me, oh, where can I put my stop loss when I buy any given stock? Okay, I will give you an example of Facebook. Um, this is just an example. Suppose this is a daily chart. Suppose that you buy the stock here in this candlestick in this day, which is Wednesday 13th of November. Now you see that, for example, one day, the second day, the stock has gone too much and you think that the stock will go up and up and up again and you can make money. Okay, so suppose that you buy the stock at 48.71. Just an example. Let's say okay, you buy the stock here, and since you buy the stock, you should make a plan to your trade. If the market is against you, where should you put your stop loss? Okay, this is what we are going to solve in this video. I'll just show you two ways on how to do the stop loss. Okay, let's go to the explanation. Okay, check this here. Where do I put my stop loss? Now suppose that you buy at 48.71. As I told you, you bought 100 shares and you try to see where the price goes. Now there are many ways on how to put stop loss, but I will give you the easiest way that I'm using. They are very easy. It's not a big deal. Okay, first, if you think about percentage, for example, you say to yourself, if the stock market is against me, I will only allow 2% of my money to be lost. Okay, 2%. You can do 1%, you can do 5%, you can do 10%, wherever you want to do. So this is not a problem. The problem is just you should set your percentage according to your strategy, according to the way you trade, depending on the volatility of the stock. Depends on many things, but you put this 2%. Now $48.71 multiplied by 2 cents equals 97 cents. It means you can lose 97 cents per share. Okay, so the loss in general for 100 shares is $97. Okay, this is what you might lose if you lose the trade. Okay, so someone told me, why we are thinking about losing, why we don't be positive and we just do the trade and wait and hope the stock goes up and we make money. Why you are negative? In trading, there is nothing that's called positive or negative. Here you are doing business, and since I don't know the future and no one knows the future, so you should protect your money. You should protect your money from losing too much in each trade. If you lose here 10% to 20% because you leave the trade, and you lose another time 10 to 20% or 30%, by the end of the month or 2 months or 6 months, you lose all your money. That's why we use stop loss to stop our loss at a given time and not to give the market too much money. Okay, so you understand this percentage. You put 2%, $48.71 multiplied by 2 cents equals 97 cents per share. It means you lose $97 for 100 shares. Okay, so this is what we have done here. $48.71 minus 97 cents equals, so you put your stop at 47.74 for the stop loss. Okay, so we go to the chart again and we try to put this 47.74. Okay, you put it here, we go and you put 47.74. This is your stop loss, and you see in the chart it's like this. Now I will just give you an example. I bought here in this day, which is 13th of November, Wednesday 13th of November, it means last week. Now 2 days it's going up, it's good, but today, which is Monday, let's see what it is today. It's Monday 18th of November. Okay, after 4 days of trading, the fourth day, the stock price has gone down to 45.92 right now. Okay, because we have 8 minutes and the market will close. Okay, now if you let your stock for today, you see how much you will lose. Instead of losing $97 in this trade, you will lose 200 and something. You will lose more money in this trade. That's why we put stop loss. Okay, and if the stock here, if this day is not bad, if the stock goes up and up, you just raise your stop loss up and up and up and follow the trend until you get too much money. Okay, so this is the one way that I showed you, is percentage. Now we go back. This is the percentage. Now you can select what you call the dollar amount. Now what is it, the dollar amount? You say to yourself, if I lose $1 from the price, I will sell, I will not stay. It means you will lose in general $100 for this trade. So 48, this is what you buy, $48.71 minus $1, you will have $47.71. Okay, because you are losing $1 in this trade. So either way, you can use this percentage or you can use dollar amount. It's up to you. Okay, so we go to the chart again, and $1 we say that it is 48.71. You change it this here for 47.71. Okay, you just, this is your stop loss. You can put it down here or up here, wherever you like, because no one will tell you exactly, because no one knows where the stock will be going tomorrow. Maybe this, you lose 2 here, maybe the other day it will go $2 here. This is the future. That's why I told you what, no one knows the future. If anyone tells you that the stock 100% goes up, he's a liar. Because I say, even if tomorrow it goes up by $1 or 2, even if it's true what he said, don't believe him. Why? Because this is the future. No one knows the future except for those who are manipulators, or the people who can change the price of the stock by force of buying or selling or short selling. Okay, so you should rely on yourself. Put your stop loss in any trade. You plan the trade. If it goes up, you are making too much money. If you are losing, you lose just a little bit. This is the kind of trading that you should do in your trading. Please see this thing. There are other ways. Other people, other traders have written books to show you where to stop loss. I'm not dealing with that because it's more complicated and it doesn't give you nothing, because you decide for the stop loss. No one will decide for you. Okay, and if you don't put stop loss, you are at risk of losing more. For example, instead of losing 2% today, you can lose 10%. Let's see the thing here. Today here we have lost 6.55%. This is just for today. Okay, so instead of losing 2%, today the stock has lost 6% and 51. Okay, so you should always rely on yourself. Okay, rely on yourself and just do the thing that it is right. Always protect your money, your capital, from losing too much money in each trade. Because if you don't put stop loss, and instead of losing 2%, you lose 6%, 10%, 20%. By the end of the month or by the end of the year, you will lose all your account by force of not managing well your trades. Okay, thank you very much. If you have any questions, just ask. Thank you.